Brothers, I told you the very beginning from the first video and the second video that I am not trying to teach this. I was just sharing an idea of what I knew. I was just sharing what I knew so that people out there can probably just open their minds and not just hunt down Diop and keep criticizing him. He's fake, he's this, he's that. I want people to open up their minds and think broadly on this whole MMC footprint. And if you don't really understand it, somebody out there might understand it much better than you. So rather ask than, condemn. If you don't know something, ask. Thank you very much. Good morning, people. Okay, so this is the Diop update to the part 2. I had some very good feedback from the second video that I made, and I got some pretty good criticism from Ashley Vanessa. Jesus, I hope I haven't butchered your name, bruv. Anyway, thank you for the criticism and the correction, actually, because most people are so proud that when someone tells them they got it wrong, they take it to heart. But the wise listen. The wise listen to correction. So when Ashley mentioned all the points that he did in that correction, if you haven't seen it, I hope you just go to the previous video, the part 2. Okay, anyway. Okay, now let's get to it. Now we're looking at CAD JPY. It has been in an uptrend. Alright, now let's just let's get rid of this. Okay, now let's get this down here. Okay, example number 1, CAD JPY. Okay, then what we are going to do is we are going to let's move this up here a little bit. Now what we're going to look for, the first thing we're going to look for is hidden divergence. Okay, I'm using a stochastic 533 that highlights every time. I'm using a stochastic 533 that highlights every time the market is overbought or oversold to help me quickly point out those areas where I want to draw my divergences at. So we're going to now here we're going to look for hidden divergence, hidden bullish divergence. All right, let's just edit this right here. It's CAD JPY on the 15 minutes chart. Okay, and we're spotting hidden bullish divergence right there, and we're going to mark out the footprint on the chart corresponding to the divergence on the stochastic. All right, now we're going to let me just type this out. Footprint. Okay, let's put this in yellow. All right, then let's move this over here. Then let's just draw an arrow to there. Over here. Now let's highlight the entry point on the stochastic would be there. The entry point on the chart would be there. That's where you would enter, and your stops would be just below the footprint line. Just keep trailing your stops according to that line, because the market is not supposed to break that line. Okay, let's type this out. Entry was here. Okay, let's draw a line right there. Okay, here, like that. Right. Then let me just type this out. Your stop loss. Okay. Your stop loss will be a trailing stop. You just draw your stop according to the footprint. Okay, respectively. Let's make this red so it stands out. Alrighty. Then okay, let me show you on the chart when I executed this trade on the CAD JPY. I took it here on the 15-minute chart. Let me just zoom in a little bit. This is where I executed that buy order in the morning. Okay, and it's running in profit right now. As you can see, it's running in profit. I am using small lots, obviously, because I am just testing out what this fellow corrected me on, and if it proves consistent, then we'll step up the lots later. Anyway, we're just looking for consistency here. Lots don't matter. Example number 2. Okay, example number 2. Okay, let's just type this. Example number 2. NZD NZD JPY on the 30 minutes time frame. Okay, let's just move this there. Let's just brighten this up a little. All right. Now we're looking for, what's this? Not this line. Okay, we're looking for divergences. Here we see hidden bullish divergence right there. Tapping into an oversold zone, sorry. Then we spot that very same corresponding line on the chart. Let's just write this here. Footprint, okay? Footprint line. Let me just put this here in brackets. Okay, we're going to use it as a trailing stop. Okay, when you enter a trade. Okay, now what you want to do is, okay, let's just label this here. Okay, that's the footprint. Now let's just mark our entry point. Would have been here on the stochastic and there on the chart, and obviously the stop loss would be just below the the footprint. Let's just label this here, entry point. Okay, entry point. Let's just point an arrow at it over here. Boom. All right. Now let me show you this where I executed on the chart. This was in the morning. I executed 2 positions on this one. There were 2 entries. One I took early in the morning. I was awake around 2, so I took one around 2 here. Then I went to sleep. And I woke up in the morning and I saw this over here and I executed here too. And I moved my stops accordingly, following the footprint, because the market's not supposed to break the footprint, remember that. So I've locked both these positions. Let me just lock some more here. Lock these positions in profit like that. Boom. Okay, now off to example number 3. Example 3. Euro USD 1 hour. Let's make this let's make this like grayish. Okay, all right, now get this out of the way. Ugh, I hate these ads. Okay, we spot here a bearish hidden divergence, and let's just draw the corresponding divergence on the chart from here to there. Okay, let's just fix this, extend it to there. Alright, so that's the bearish hidden divergence on the Euro USD. Let's mark our entries. Okay, wait, it's here. Would have been the entry, which is over there on the chart. And okay, let me just type this up. Footprint. Okay, here's the footprint line. Let's make this yellow. Okay, let's draw an arrow to that here. Okay, let's call this the entry point. Okay, let's just draw an arrow to it here. Okay, some right there. That would have been the entry point. Now let me show you where I took this trade in the morning. I took it here. Let me just zoom in. I executed right here in the morning. I took this trade over there. Where is this? Here. Hey, this arrow here. That's why I executed my sell, and I put my stops just above the footprint line. Let's move on to example number 4. Example number 4. USD CAD H1. Okay. So here we're looking for this has been trending downward. It's been trending downward. So what did I see here? We're looking for divergences, right? These ads. So I spotted a hidden bearish divergence here. Let me use this point and draw that corresponding divergence on the chart, which would be to here. Okay, and that's how I'd have drawn that. Let me just okay, let me just type this out here. Footprint. Okay, let's make this yellow. Okay, there, and then get the arrow. That's the footprint. Okay, and then now let me mark entry on the stochastic and entry on the chart. Okay, stop loss, just goes right behind your footprint line. Let me show you why I executed this trade in the morning on this thing here, CAD USD CAD USD CAD. This has been trending downward, so I executed this. Okay, I executed this over here. They're always there. Right. Okay, so all right, this is okay. Let's just write this out here. This is example number 5 on the Euro JPY 5-minute. Okay, let's make this gray. Okay, this thing has been trending up. It's been trending up. Now let me show you where I executed from. Was here. I saw divergences. I can see so many oversold zones here, so I drew my divergences from here to from here to there. was the divergence. Let me draw that also on the chart. Here to there, that's a divergence. Then let's see, okay, there's another divergence right here, another divergence right here. Okay, and okay, let's draw this on the chart. To be from here to there. Hey, there on the wicks down there. Okay, that's done. Then let's see. Let me just type this out. Okay, this is footprint. Footprint 1. Okay, footprint 1, because let's make this yellow. Footprint 1. Move you here, and let's just draw a line to you right there. Just a little lower, right there. Perfect. And then just move. Okay, let's go and make this footprint number 2. Okay, and let's just draw a line here to the second footprint, which is that one there. Okay, those are the 2 footprints I saw in the morning. Then I executed right there on the first footprint, which is here on the chart, and I executed over here. Where's this? Here on the stochastic, and over here on the chart. Now let me show you why. Let me just type this here. Entry point. Okay, let's put this up here and let's draw a line here to there. Right, and let's just draw another line from here to there. Okay, right, that's how that trade set itself up. Let me show you why I executed this on my MT4 in the morning. So this is where I executed it right there. I took my trade right there. Okay, this was earlier in the morning, like way earlier in the morning, and then there was this one right here. This GBP. Now this is GBP JPY. Okay, let's type this out here. Example number 6. GBP JPY. Executing on the 15 minutes. Okay, let's make this gray. Right now, okay, let me show you something here on the 4-hour. Oh my god. Okay, right. Okay, I saw, okay, this here, I saw there was a right there was hidden divergence right here, and let me draw out the footprint right there. As you see, the market never broke that line at all, so that footprint remained valid. It didn't break that line. Let's make this blue because it's on the higher time frame, H4 time frame. Okay, I like to use different colors for different time frames so I do not get confused. This is H4 footprint. Okay, let's make this blue there. Then let's draw a line here. Okay, that there would have been the H4 footprint. I would have executed on that candle if I was to trade the H4 footprint, but that's like way too big. Anyway, I don't execute on the 4 hours, like way too big of a risk. Like that's way too big. Let me show you something here on the 1 hour now. Okay, on the 1 hour, okay, as we're still in that bullish footprint, right? On the 1 hour right here, I could see. Okay, here I could see this here, hidden divergence right there, and let me just draw this out on the chart as well. Okay, wait, let's make this green to show it's on the 1 hour, different color, different footprint. Let's just label this 1 hour footprint. Okay, let's make this green too. Yes, then let's just draw a line. So this right here is where the footprint took effect on the 1 hour, and one that entered right there, right here. I mean, this is a lot of money, a lot of money. If you just imagine if you entered right there, okay, entry right here, have been your entry right here, right there would have been your entry, and then I see another hidden divergence right here. So this here would have been your, here also been another entry right there. As you see, the line is still valid. It was not broken, not even once. Look at that. Look at how clean it is. So clean, so clean. Market respected it. One would have entered here, and one would have entered right there. You know, so let's just write this here. Second footprint. Look at how clean this is, though. Look at how clean. Look at how clean these entries are. Second footprint would have been right there. Let's draw a line pointing to the entry. Come right there. Okay. That would have been your entry. Now the footprint. Okay, and your entry would be right there. Look at how clean it is, though. You would have entered at the bottom and then enter over there, and then there was here more hidden divergence, as I can see, and more oversold region down here. That's another hidden divergence. And let me draw it on the chart right there, from there to there. I mean, look at this, so beautiful. It's like way too beautiful. So much money, so much money. Ugh, so much money. So your entry would have been here and here. So look at that. And mind you, this is like on the 1 hour, and if you're doing this and dropping like some crazy ass lots, oh my god, you would just be laughing to the bank. You'll be laughing to the bank. Oh my god. Okay, okay, right there. Okay, footprint 3, entry and entry. Okay, so now let's get down to the 15-minute and show you where I entered today. I mean, imagine if you had taken all those trades. Ugh, imagine. I mean, ugh, so much money in GBPJPY right now. So much money. So today, here looking at the 15 minutes, I saw this here. It's oversold, alright. So right there makes it a buy footprint right there. There's my footprint. Let's make this yellow, because we're on the 15 minutes. Each time frame has its own color. Okay, let's just write this here. Footprint. Okay, at 15 minutes. Let's make this yellow. Okay, right there. So it would have been that was the footprint here on the 15 minutes. You see how the market has been respecting the footprint line everywhere, from the 4 hour all the way down to all these entries. It's just been respecting. So much money. It's just right here, entry. Okay, point that there. Okay, let me show you where I took this trade on my MT4. I took it right here actually. Right, come here. Footprint was, come here you. Footprint was right there. Oh snap, there's another one right here. Okay, right there is another one. Let me just I can't let this go. Come here. Just let me just enter. Okay, just a few more for good measure. Just like that. Enough, good measure. As you see right there, and the footprint on the chart is this one right here, like that. Okay, hey, but this one's very steep. It's very steep. The line can be broken anytime and I'll be in trouble. So steep, yo. Hey, I don't like steep footprints. They make me, the probability of success in a steep footprint is very low, you know. And the market just returns and just breaks this point. So my first entry was here, and my entry I've just taken is right there right now. But this is so steep. Anyway, my stops are going to be close anyway because it's very steep, so I'll just put my stops